If you're paying a mortgage, then I need you to watch this video from beginning to end, because what I'm gonna introduce in this video is gonna be extremely simple, but one of the most powerful mortgage pay down strategies that you're probably ever gonna see. And it's going to allow you to have a significant boost to your credit currently today, not years down the line. It's gonna give you the opportunity to save a ton of interest on your mortgage. And it's gonna start to open up cash flow for you as a homeowner that will allow you to actually invest and handle other financial metrics that you have to improve your overall quality of life. I am covering this not only from a personal perspective because I am a mortgage holder. I'm covering this with Chase Bank in particular because my mortgage is with Chase Bank. And I also know that the strategy I'm going to introduce is something you can do almost on an unlimited basis with Chase Bank. So you'll have to check with your mortgage lender to make sure this is applicable for you. So I'm covering this from a multitude of angles. Somebody who's licensed in the field, as well as someone who has a mortgage and is looking to make the most responsible and prudent financial moves to benefit myself financially, save on interest, improve my financials as early as I possibly can in my financial journey. So we need to cover a couple principles to make sure that the strategy I'm going to teach you makes sense, okay? The number one most important elephant in the room is that mortgages are extremely expensive if you service them the way that they are laid out and designed. Meaning that if you get a 30-year fixed rate mortgage, if you pay it the length of time that it is designed and amortized for you to pay it, you are going to pay 2.5 to 3 times the purchase price of that home by the time that 30 years is up. Most of us know this. Most of us have, been educated on the concept of amortization, etc. But in most cases, if that home was $300,000 originally, you're going to pay $700,000 to $900,000 total for the financing of that same home. Now, we also know that real estate appreciates, historically speaking, pretty consistently and to our advantage. But it usually does not appreciate over 30 years to exceed the cost of financing if you don't do anything different but pay that mortgage as amortized. So with that being the case, now that leaves most of us trying to find effective ways to turn that math into our favor. Meaning, how do we own a home for potentially out to 30 years or whatever window of time and make it financially advantageous for us, not the banks? Many strategies have been brought up over the years. We have basic mortgage pay down strategies like adding extra principal, bi-weekly payments, lump sum payments, etc. What I'm going to cover with you today in this video is going to be a way for you to use basic mortgage pay down tactics and actually put the ball back in your favor, not only through the life of the loan down the line, but in today's time, meaning that you're going to be able to take advantage of this from a credit boosting perspective, interest savings perspective, and a cash flow perspective without having to use your credit to do it, without having to do any crazy HELOC or refinance strategies. When you get a mortgage, the first 7 to 10 years, over 90% of that payment is strictly interest. Most of us are privy to that. If not, you're welcome. If you have a mortgage that is less than 10 years old, you are going to benefit tremendously from this strategy. If your mortgage is less than 15 years old, you're still going to benefit greatly from this strategy. The strategy is basically where you're going to make extra mortgage payments or a lump sum mortgage payment or a bi-weekly payment or a combination of such. But what you're going to do differently is a little known strategy that unfortunately is hardly ever spoken about. A process called recasting. And I want you to comment down below and let me know if you've ever heard of recasting prior to me explaining what it is. Recasting is basically when you make some kind of excessive payment beyond your regular scheduled amortized payment. And you go to your lender and say, I want an adjustment for the life of the loan based on the extra payment that I just made. You're telling your mortgage lender in this case, the finance closed amount about to work out for the next 30 years is $300,000. My payment is $2,000 a month because of that. I'm going to put an extra $10,000 down right now. Once it posts to my principal only, just in case for those who may not know, this is a principal only strategy. I'm going to basically have my lender restructure all my payments around the fact that it's $290 in principal now instead of $300. That immediately, the interest that you're going to pay on that loan down, because interest is now being paid on $290 versus $300,000. And if you make extra payments and don't recast the loan, that basically means you're still going to pay the same $2,000 a month that I'll use as an example, but you're going to only have to pay it maybe 27 years instead of 30, 25 years instead of 30. That's great. That's cool. But recasting allows you to actually see the cash flow benefits right now. Recasting allows the mortgage lender to recognize the fact that it's only $290 right now versus 25, 27 years down the line. So that means that instead of paying $2,000 a month, you might only pay $1,800 a month or $1,600 a month. If you do this same strategy and you pay enough down, let's just say you took a loan out originally that required PMI. Now, you might make an extra payment that breaches that 20% mark. If it's not an FHA loan, you can do this with conventional loans, etc. You can get rid of PMI and recast the payments. So that means you might wipe out another $100, $150 in PMI, and your principal and interest has been reduced to reflect the extra $10,000, $20,000 in payments you've made. Now, how does this work if you're somebody that doesn't have $10,000 or $20,000 to throw down at one time? It works out beautifully if you make a bi-weekly payment and maybe an extra $100 a month, because you're gonna end up probably making $2,000 to $3,000 or $4,000 or more in extra principal payments. Tax returns. I got $3,000, $4,000, $5,000 on a tax return, and I wanna be prudent and wanna make smart financial decisions with that extra money. Now I can take that tax return of $3,000, $4,000, $5,000 every year and put it down on the principal of my payment and ask my lender to recast every year. This is something I know for certain that Chase Bank will allow you to do unlimited amount of times. So this works no matter how you're making extra principal payments, as long as it's sizable enough. Recasting allows you to pull the benefit of that principal pay down to the current when your money's more valuable, versus waiting 27 years or 25 years or 23 years on that payment to reflect and be paid off at that time. Now, those of you who have seen this argument of, should I invest? Should I pay down on my mortgage? You're getting the benefit of doing both right now. Yeah, you can have your cake and eat it too, because that $200, $300, $400 a month you just created through that mortgage pay down and recasting and reamortization now is available to you now. So if you're smart, you take that mortgage pay down and take that same $2,000 you already budgeted for, but your mortgage is only $1,700 a month. Guess what you get to do with that $300? You get to put it in that oh so fancy S&P 500 index and get that 5, 6, 7, 8, 9, 10% annualized return that everybody keeps bragging about for the next 20 or 30 years. Even if it's for your kids' education and you got 10 years before they go to college, same rules apply. So I just wanted to put this on your mind, because when I did the math on this and discovered this strategy, I haven't seen it anywhere on YouTube. It may exist, but this is the first time I've seen it, and I'm a financial professional with a mortgage license, a banker, and I'm like, damn, this is crazy. So I just wanted to put this out there. I want you to comment down below and let me know if this is new to you. If it's existing and you've tried it, please let me know what the results have been for you. Or if you plan on exercising this, let me know who your mortgage lender is and if they allow for recasting throughout the life of the loan. Comment everything down below. To all my pioneers, welcome back. To my new viewers, welcome in. Support the channel so this channel can keep supporting you. I want each of you to stay focused, stay in motion. I'll see y'all soon.